Hey everyone, welcome back to BK Collectibles, your go-to channel for everything coin collecting and numismatics. Today, we're diving deep into one of the biggest debates in the world of precious metals, gold versus silver, which is the better investment. This is a question that has been asked for centuries, and today we're going to break it down from every possible angle. Whether you're looking to preserve your wealth, hedge against inflation, or just starting your stacking journey, understanding the differences between gold and silver is key to making the right choice. We'll go over the pros and cons of each metal, historical price movements, real-world applications, liquidity, and even some of the strategies professional investors use to maximize their returns. If you love coins and precious metals, make sure to subscribe for more great content. Now, let's get started. Gold has been revered as a store of value for thousands of years, dating back to ancient civilizations. The Egyptians, Romans, Greeks, and Chinese all valued gold as a form of currency, and that tradition continues today. Unlike fiat currency, which can be printed in unlimited quantities, gold has a finite supply, making it a hedge against inflation and economic instability. When governments increase the money supply, the purchasing power of paper money decreases, but gold historically holds its value. In times of economic turmoil, geopolitical crises, or financial uncertainty, gold tends to surge as investors seek safety. A key reason for this is that gold is not tied to any government or central bank. It has intrinsic value that has stood the test of time. One of the biggest advantages of gold is its high value in a compact form. A single 1-ounce gold coin, like the American Gold Eagle, Canadian Gold Maple Leaf, or South African Krugerrand, can be worth thousands of dollars, making it an efficient way to store significant wealth. This is why central banks and institutional investors prefer gold over silver for long-term wealth preservation. If you need to transport or store large amounts of wealth, gold is far superior to silver simply because of its density. However, the high price of gold also makes it less accessible to new investors. Not everyone can afford to buy full-ounce gold coins, so many people opt for smaller fractional gold coins, such as half-ounce, quarter-ounce, or 10th-ounce pieces. While these offer flexibility, they often come with higher premiums, meaning you pay more over the spot price of gold compared to buying a full ounce. Additionally, gold's lower price volatility means that while it holds value well, it doesn't experience the same explosive gains that other assets like silver sometimes do. Silver, on the other hand, is often called the poor man's gold because it provides a more affordable way to invest in precious metals. You can buy a 1-ounce American Silver Eagle, Canadian Silver Maple Leaf, or Austrian Silver Philharmonic for a fraction of the cost of a gold coin. This accessibility makes silver a popular choice among new investors and those looking to accumulate larger quantities of metal. Silver is unique because it has both monetary and industrial applications. Unlike gold, which is primarily held as an investment or used in jewelry, silver is heavily used in manufacturing, electronics, solar panels, and medical applications. This industrial demand gives silver an additional layer of value, but it also means that silver prices can be more affected by economic conditions. One of the biggest advantages of silver is its higher price volatility. While this can be a downside in a bear market, it also creates opportunities for significant gains in a bull market. For example, during times of economic uncertainty, silver often outperforms gold in terms of percentage increases. In the early 2000s, silver was trading at around $5 per ounce, but by 2011 it had surged to nearly $50 per ounce, a tenfold increase. Gold also rose during that time, but in terms of percentage growth, silver was the clear winner. This volatility makes silver appealing for investors looking to capitalize on short-term price swings. However, this same volatility means silver can experience steep declines just as quickly. Unlike gold, which is seen as a safe haven asset, silver behaves more like a commodity, which means its price is heavily influenced by industrial demand. During economic downturns, when industrial demand slows, silver prices often suffer. In contrast, gold tends to hold its value better because it is not dependent on industrial use. Another key difference between gold and silver is storage and bulk. Because silver is much cheaper per ounce, you need a significantly larger amount of it to equal the value of gold. To match the value of a single 1-ounce American Gold Eagle, you would need over 71-ounce silver coins. This creates logistical challenges when it comes to storage and transportation. Silver is also more prone to tarnishing and oxidation, whereas gold does not corrode or tarnish. While this doesn't affect the metal's intrinsic value, it does mean that extra care is required when storing silver. Liquidity is another important factor to consider. Both gold and silver are widely recognized and easy to sell, but gold has a broader market appeal, especially among central banks and large institutions. If you need to liquidate a portion of your holdings, selling smaller amounts of silver might be easier than selling a single high-value gold coin. For example, if you have a 1-ounce gold coin worth $2,000 but only need $500, you would either have to sell the entire coin or find a buyer willing to split it. With silver, you have more flexibility to sell smaller portions as needed. Historically, investors have also watched the gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold. Over the last century, this ratio has fluctuated between 15:1 and 100:1. A high ratio suggests that silver is undervalued compared to gold, while a low ratio suggests the opposite. Many investors use this ratio as a tool to determine whether to buy more silver or gold. In terms of taxation, gold bullion coins like the American Gold Eagle and Canadian Gold Maple Leaf are often considered legal tender and may have tax advantages in some regions. Silver, however, is treated as an industrial metal and may be subject to higher sales taxes or capital gains taxes. Always check your local regulations before making a purchase. So, which metal is the better investment? The answer depends on your financial goals. If you're looking for long-term stability, protection against inflation, and a highly liquid asset, gold is the stronger choice. If you're looking for higher potential gains, a lower entry cost, and more affordability, silver may be the better option. Many investors choose to hold both metals to diversify their portfolio and balance out the risks and rewards. Another strategy used by experienced investors is cycling between gold and silver based on the gold-to-silver ratio. When the ratio is historically high, meaning silver is cheap relative to gold, investors may buy more silver. When the ratio drops, meaning silver has gained value against gold, they might trade some of their silver for gold. This approach allows investors to increase their overall precious metal holdings over time. Regardless of which metal you choose, both gold and silver have proven to be excellent stores of value throughout history. They offer protection against inflation, economic uncertainty, and currency devaluation, making them an essential part of any well-balanced investment strategy. If you enjoyed this breakdown, be sure to like the video and leave a comment below. Do you prefer gold or silver, and why? Let's get a discussion going. Thanks for watching BK Collectibles, and I'll see you in the next one.